Welcome, friends. My name is Avinash and I welcome all of you to another interesting episode of Corporate Face to Face series. Friends, as all of you are aware, we introduce emerging companies from emerging sectors on this platform, and we make it a point to talk to the promoters and the top managements of such companies so that all of us can understand these companies in a much better way. We get to understand the company's business model, their growth journey, their future growth plans. And today, friends, we've got another interesting company which is going to hit the capital market very soon. The company's name is Snehaa Organics Limited, and I have the privilege of having the entire management team. I have Mr. Kiran Nandigala, who's the promoter of the company. Kiranji, welcome to the show. Thank you for your time. We also have Mr. Shammi Khanna, who's the merchant banker from Fast Track FinSec. Sir, welcome to you. And we also have Mr. Sarat Chandra, who's the CFO of the company. So, gentlemen, thank you all of you. It would be my pleasure to host you and know more about the company. And I'm pretty sure we'll get a very good input from your side, which will help all our investors. So, Kiranji, first question to you, which is very elementary. If you could tell us, how did you start this business? It's a very interesting business. You are in the solvent business and a young age, I mean, your age is also very young. So, how did the idea, come to you that you decided to get into the solvent business? And secondly, sir, हमारे धंधे का business model थोड़ा समझाइए. If you can tell us what is the business model of our company and how are we positioned in the domestic market? So, please start.
Avinash ji, thank you so much for introducing our company. It's a pleasure to be on this platform sharing the screen with you. And I am Kiran Nandigala from Hyderabad, and I am the managing director of Snehaa Organics Limited. So, to give you a brief about the company, the pharmaceutical industry overall is responsible for developing life-saving drugs, tablets, advanced injections, and also therapies. So, during the manufacturing of these drugs, active pharmaceutical ingredients play a very key role. And in the process of manufacturing active pharmaceutical ingredients, solvents play a very, very key role. And that is where the supply of in the complete supply chain of pharmaceutical manufacturing, Sneha plays a very essential and often overlooked role in the pharmaceutical supply chain. So, once these solvents are used by these pharmaceutical companies in the process during extraction or purification, they are they become spent solvents. So these spent solvents are contaminated with a lot of residues and with a lot of impurities which have to be discarded or recovered. This is where Sneha Organics comes in. At Sneha Organics, we recover and purify these spent solvents to further purify with our advanced technology of distillation, and we produce it into the reusable products. So that is where Sneha Organics provides a very key role of transforming waste into reusable virgin petrochemical derivative of solvent, which is being imported in $15 billion value on an annual basis. So this our facility is a PCB and PSO certified company, which saves the cost of the pharmaceutical company by replacing the reused and recycled solvent instead of using a virgin solvent. At the same time, this supports the environmental compliance of the pharmaceutical company because they are using more recycled material. At the same time, this reduces the need of importing the material. So this is a cyclical economy which we are targeting. And this complete industry is highly fragmented by very small players in the region of Telangana and Andhra Pradesh. So we are exactly catering to the big, we are doing in a very big scale, which makes it much lucrative, and going into the public market and increasing the visibility will further enhance our company's growth trajectory.
Okay. So I think nicely articulated by you, Kiranji. Kiranji, two questions within the solvent product base. You said that you purify the spent solvent and then again repurify it. That I understood. Tell me how many types of solvents do we manage? Like if you can give us a number, is it like you have a fixed number of SKUs depending on the applications of the solvents? Point number one. And secondly, sir, how important is technology here? Because see, the technology seems to be the heart of the business. So if you can tell us, how did you manage to get this technology? Because I was just seeing the profitability margins. Margins are very attractive, and again, you are generating something from waste. So tell us something on this.
Right, sir. So, to your first question of products, we have a great product portfolio to do more than 72 products. But right now, we are doing a much more volume-based products, which includes five products in our key portfolio, which is mentioned in the RHP as well. We have chosen these five products because of the volume. And secondly, what your question was about technology. Now, with regards to the technology, that plays a very key role in our announcement. And being a second generation business owner, we have 25 years of experience in trading of virgin raw materials. We used to import and sell the virgin raw materials to pharmaceutical companies. With this 25 years of experience, we've built up a lot of rapport with these companies. So then when we have uh, taken over this company in 2019, it was previously run by a few partners who used to often have disputes. So we bought the complete stake in 2019, converted it into a private limited in 2022. And then we have gotten so much more volumes because of our rapport that we have built up with these pharmaceutical clients. And then the technology aspect is because of we have 2 decades of experience of handling the pharmaceutical, these solvents. It's We have infused a lot of capital to make best kind of knowledge transfer from countries like China and Europe to understand how they are purifying their solvents and how they will reuse. So we've infused those kind of efforts and technologies into our Indian method of solvent recovery and made it a very niche sector to purify and get the most amount of output, because we are working on a job work or a contract manufacturing point of view. The recovery yield is most important, because we'll have an agreement with the customer saying that we need to give 80% of the output back to him. But
Right.
because of our technological know-how, we will attain 85% or 86%. So the remaining 5 to 6% directly goes into our pocket, where we will sell it into the open market, where we are only liable to supply 80% to the customer. So that is where our margins really increase to make it very attractive to the as a company.
So understood. Kiranji, now tell me one thing, from where do you get the spent solvents? Like, do you have any arrangements with any vendors? Like, they give you the spent solvent, then you purify it, and then you give it to the final customer. And secondly, tell us something about your customer profile. Even if you don't want to tell us the names, at least tell us which sector. Is it only the pharma sector or maybe some chemical sector? Because solvents are used across many sectors. So if you can give us some
Absolutely.
background where the solvents are used.
Perfect. So, to start with answering your second question, our customer base is not really super concentrated on pharmaceuticals, but 60% of our revenue is generated by the pharmaceutical market. The remaining 40% is generated by agrochemicals, by specialty chemicals, and also by the paint industries. So solvents have huge requirements within all the sectors, and our products and our byproducts are sold within all of these industries. We are not very concentrated only in pharma, but the raw materials what we get are exclusively from pharma, because pharma uses mostly virgin materials in their process in the initial rounds. So during that they get a lot of spent solvents. So we have strategic tie-ups with a lot of these pharmaceutical companies in the region of Telangana as well as Andhra Pradesh. As you know, Telangana and Andhra Pradesh, both of them collectively account to 40% of the India's total pharmaceutical hub. So we have strategically located in India to source these materials, and these are commodity materials where transportation cost is very huge. So being strategically located in Hyderabad gives us a hyper local advantage of attaining these materials, purifying it, and again sending it back to them or in the open market.
Kiranji, on the pricing, if you could give us some idea, like, this is a commodity, but then since you have a technical edge, you manage to re-purify the spent solvent. I mean, how is the pricing done with the customer? Is it a fixed pricing contract, like itna quantity hai, so much quantity needs to be supplied. So you enter into a contract at a fixed price, or maybe there is some price escalation clause. How does it work for every customer?
Absolutely. So the pricing aspect is run with regards to the volume that a customer gives, and to our key clients who give us a set number of volume, we charge a standard job work charges or a contract manufacturing charges that we charge them based on the material, and depends each and every solvent depending on its boiling point, depending on its volatility, it will take some set of hours to be purified in our manufacturing facility.
So,
So based on that, we will give a specific job work charges. For example, 18 rupees for ethyl acetate per kg of output. So after this 80% output has been achieved by me as per the agreement, I give him 80% back. And while I'm giving the 80% back, I bill 18 rupees per kg. To compare it with the virgin raw material is almost 75 rupees per kg.
okay,
So instead of using the 75 rupees per kg, he is giving out the spent solvent to me. I'm purifying it, and his product cost is only coming down to 18 rupees per kg.
okay,
So the
okay.
customer is getting a lot of benefit. This is also contributing to environmental sustainability goals. At the same time, due to my technological know-how, I am recovering 85%, and 5% I am selling into the open market due to my advantage.
Okay. No, no, understood.
So
Uh,
everybody has a win-win situation here.
Yeah. No, I think understood, properly understood. Sir, now tell me one thing, Kiranji, like, we have created a niche for our product in the industry without looking at the financials. Sir, what is the value add? First is, of course, the pricing, which you mentioned, the virgin material and your material, there's a big price difference. But apart from the price, what is it that makes the customer come to you and give you repeat business? If you can tell us two, three qualitative points which make you little special in the industry, because you convert waste and then you generate a good profitable product for you. So sir, isme two three qualitative points if you can share for the benefit of our investors.
Yes, as you rightly mentioned, you named it in a very simple way that how we generate waste, but it's much more complex in the real scenario. But I hope that I've simplified in a way for you to understand how we have presented our group as a top circular economy reuse of solvents solution provider, mainly to the pharmaceutical and specialty chemical sector in South India. So now one of the major advantage that we have is with regards to the tie-ups. As I mentioned, for the last 25 years, we've had great rapport with these pharmaceutical companies who stick by us for because of the rapport that we have built. So when we have taken over this company, the previous partners used to do only 150 metric tons of processing per month, and now we are on monthly basis we are doing 750 metric tons per month. Because of these economies of scale, we are achieving one of the most highest form of cost per least form of cost per kgs, because of economies of scale. So a lot of small pharmaceutical companies don't want to take the headache of doing it themselves. They want to give it to a trusted partner like us, who can do it on a much bigger scale and much cheaper compared to them. That's number one. And number two, we invest heavily in capital as well as in safety standards, because when we are doing a contract manufacturing, all the raw material provided to us belongs to the principal himself.
Okay,
So when people who are doing it in a very unorganized sector, if there is any fire hazard, the job worker is not responsible for it. The person who lost the material, the big pharmaceutical company is liable for that material. So they trust a big company. They trust a company who has good ethics, good investment into the safety standards. That's
okay,
what makes it the customer attractive. And lastly, the environmental compliance that we follow with regards to PCB norms and with regards to PISO norms is one of the most attractive form of norms that we follow, which makes the customer, TK, this guy is a big guy and my material will be safe with him. Even though if I want to sell to him, or if I want to give other contract manufacturing to him, a very good attractive plan, because everybody does in a very normal simplified methods, who do not follow great norms for safety or for purity. And because these products are used for life saving drugs, nobody wants to compromise,
Yeah.
because the companies that I deal in they have a market cap of more than 20,000 crores. So they don't want to save small figures to spoil their big companies where they need to export their final products. So that is the reason which we have chosen this niche, and we have 80% customer repeatability, which proves that we have very sticky customers.
No, no, I think very nicely articulated, Kiranji. Sharadji, now one question on the financials to you. Sorry for keeping you
Yes.
waiting. Sir, we
Yeah,
saw
it's good.
this year financials have been pretty solid. I think we saw revenue of 26.72 crores from 24 crores last year. The profit after
Yes.
tax has almost doubled. It is now almost 7.34 crores. Sir, just
Yes,
wanted
sir.
to understand what is the reason the profitability jumped so sharply? Any specific reason like volume increased or you got better prices? What were the
Yes,
key
sir.
reasons for
Yeah,
better
yeah.
profitability?
Listen, this is mainly on account of our capacity expansion, which we have done during the year. So last year we used it to be 660 metric ton per month to 720 metric ton. We have done the capacity expansion. And also there is a better capacity utilization when compared to the last year.
Okay.
So even with this capacity expansion from 80% to 88% we have reached for this financial year. And also enhanced economies of scale is one reason. And we have done few machinery upgrades in our quality check mission, where we are able to get the exact quality what we are getting the material. So based on that, we are committing the percentages to the customer.
Okay.
And when compared to the last financial year, there is one more line item in one-off expenditure which has been there in the last year. So that has been nearly 1.05 crore, which has been sent for means which has been spent for marketing initiative and brand building exercise.
Okay.
So that is also one factor. When if you compare with the last year, the numbers have been almost doubled.
Okay. No, understood. Thanks for the info, Sarajji. Sarajji, now tell me one
Yes.
thing without giving a number, because we follow SEBI compliance very strictly. Don't give us a future number, but tell us, according to you, whether these margins which you are earning as of FY25, can we confidently say that these margins can be sustained for current year also? Because now we are almost in the month of August, for
Yes, sir.
FY26. These margins, are you
Sir,
confident you can maintain these margins?
yes, sir, yes, sir. Very much. Our margins will completely sustainable for the future years also. The only thing is, once we receive this IPO proceeds, the margins will definitely grow up. And for the future years, we are aiming for a CAGR of 25 to 30%, both
Okay.
at top and bottom.
Okay. Okay. Understood.
Thanks.
Kiranji, I wanted to understand now. Tell me, is this business an order book driven business, or basically every customer gives you a required quantity and business keeps coming every month, every quarter? How is the production planned at your site? Like, how do you plan for production?
Yes, thank you, sir. We are currently operating 6 columns. We started off with 4 columns in 2022, but every year we've been adding more columns. So more number of distillation columns means more installed capacity. More installed capacity means more utilized capacity. So now ours is not an order book system, but it's as long as these pharmaceutical market companies are running, they have to be producing their active pharmaceutical ingredients. They have to be using solvent, and they have to be sending the spent solvents to us. We have to be recovering the solvent, and we have to be giving back to them, where they replace it with virgin solvent. So it's a complete circular economy which comes continuously. So, and because we have majority of our revenue coming from pharmaceutical sector, which is a foolproof sector, because whatever a natural calamity comes or any kind of COVID comes, also pharmaceutical sector is something which is imminent and evergreen. So it is always cyclical. We are always looking for new and new clients going forward with higher margins, or where we can do more volumes with regards to client to client.
No, no, I think understood. Kiranji, one quick question which I wanted to ask you. You mentioned about circular economy. Sir, our industry or our work, does it get the benefit of these EPR benefits? Because you must be aware, then you do some recycling activity, you get EPR benefit. So are we eligible for
Correct. Because in solvents, as per the government norms, it will be coming in the next few years with regards to solvent usage as well. At the same time, we are also targeting in different sectors which are already EPR compliant, starting off with plastics. So we are also planning to start up plastic recycling, because all of them are nothing but petroleum derivatives only, be it plastics or petrochemicals. So we are looking at engaging in I mean in plastic recycling, mainly HDPE, LLDPE, and PET, where we recycle them with regards to EPR certified, because we have big pharmaceutical companies who are using huge plastic usage for their packing materials, and we can collect it from them. How we are collecting the solvents, we can collect the waste drums and packing material from them,
Yeah,
we purify that, and we clean that, and through a extruder we make that into pellets or granules and sell it as a PCR,
yeah,
post consumer recycled plastic,
correct.
at a much more higher value, more than the virgin material itself. So it
Okay,
is a very high lucrative margins which we are looking at even further.
okay. No, no,
But
I think,
yeah.
no. Now, sir, Sharadji, on the working capital side, if you can tell me, sir, what is the normal working capital cycle for us since we get the raw material from the pharma majors and we do the job
Yes.
work? Typically, what is our working capital cycle from the time we get the raw material, we process it, and then again give it to the pharma company? How quickly does the cash flow come to us? In sense, what is the working capital cycle?
Sir, over a period of time, the working capital cycle has completely changed. During COVID, we used to get our data cycle within 30 days because of the COVID and all these things. But currently, the market has completely changed. Now, people are expecting nearly 120 to 150 days of credit. So,
Okay,
debtors itself is a 5 months period. And
okay.
if you see the inventory coming in and processing, and then we need to send it back to the contract manufacturer, means contract the
Ah,
customer, it will take another 1 month.
okay.
So,
So
on a whole, if you take, it will be 6 months cycle working capital.
okay, okay. So this cycle will continue to remain as it is, sir. 5 to 6 months.
Yes, sir, very much.
Okay, so
Yeah,
that's a
yeah, sir.
very so it's a big working capital intensive sector. It means correct.
Sir, yeah, obviously, sir. Why? Because without this credit period, we won't get that kind of a margins also.
Ah,
So
okay,
people won't. Is also one issue.
correct.
So the completely the sector has got changed over the last 3 years. So
Okay,
pre-COVID era and post-COVID era, if you see, there is a huge change in the working capital cycles of all the pharmaceutical
yeah, yeah.
companies.
Understood. Acha, Kiranji, now
Yes.
one question which is very important, because this has been mentioned in your prospectus. Sir, we have got one or two companies which are in the same business. I just saw the numbers, the names. It is called TCR Chemicals and Magnus Life Sciences. Can you tell us, sir, why these companies make the same product? Are these companies owned by the promoter? What is the overall strategic, use of these companies? Because, publicly now this company will go public. Sir, if you can tell us something about these companies.
So not only that, there are multiple other small scale companies who do very low volumes, maybe compared to even 25% of the volume that we do, and 25%, less than 25% of the turnover that we are dealing in. So because it's a highly fragmented this thing, they are really not a competitors to us, and we do not have any equivalent peers which are in the listed companies as well. So the volume that we do are done by big pharmaceutical companies, where they do the recycling of their own materials themselves instead of outsourcing it.
No, no,
So we
understood.
truly,
Understood, Kiranji. I just wanted to understand since this company, both these companies are owned by the current promoters only. I said, can we assume that now going forward, whatever business we do, will it be in the listed entity largely?
yes, sir, everything will be in the listed entity only. Whatever transactions that we have done, also it's in the arm's length model only,
Okay,
and it's based on the material availabilities only.
okay. So basically, I think investors
Avinachi,
can
if I
rest
may
assured.
add, if you allow me to,
Yeah, Shamiji, boli.
yeah, the thing is that the other companies, they are mostly into trading of the material. They are
Okay,
not into reprocessing of the chemicals.
okay,
Whatever the recycling of the chemicals is happening, solvents is happening only in this company. And
okay.
going forward also, they don't have the manufacturing capacity, so it will be continuing like this only.
Okay. Okay. Fine, I think understood. Very articulately told by you. Kiranji, now important questions. Shami sir, आप बताओ. Sir, company is planning to make public issue. Sir, if you can tell us something about the IPO, what is the size of the IPO? What is the key objective? How are the
Yes,
funds planned to be utilized?
yes,
If you can please tell us.
yes, please. So we are coming up with 1,000 fresh equity that we are trying to raise. The face value is 10 rupees, and the price band we have kept is 115 to 122 rupees. Lot size is 1,000 rupees. Today, nowadays it is two lots. So for each investor, it will be two lots. That is 2,000 shares that they will be applying for. Total pre-equity is around 94 crores. The post IPO, the total market cap will be around 124 crores. That will be there. And the total number of shares existing is 75 lakhs. Post listing, it will be 1 crore 1 lakh 79,000 shares.
And what is the main objective of these funds? Shami ji, main purpose क्या रहेगा?
So mainly it is working capital
Okay.
and repayment of loans.
Okay.
That we have taken the term loan. There are around 3.5 crores will be for the repayment of the loans. Rest will be mainly used for the working capital purpose.
ठीक है, understood. Kiran ji, last question to you, which is very important. We ask all the promoters, sir. Sharad ji mentioned about COVID. Sir, if you leave alone COVID, what is the most important risk in our business? Like, you are in a product where you got to be very careful on the handling side, on the quality side. But typically in this business, what is it? What is the business risk which you constantly monitor so that all your operations are run smoothly? If you can please tell us something on that.
Sir, because we are, dealing with hazardous, flammable chemicals and solvents, which are not only, difficult to handle because these are not any solid products which can be easily, switched from one location to other. These are very hazardous, these are very flammable, and all of them. And even though there is no ignition of spark, also they can be because of static energy that they develop, they can be flammable themselves. So having good experience like us in the solvents industry handling for the last 2 decades, it gives us an added advantage of handling these materials extensively. So that kind of level of expertise is needed. So that is one of the biggest entry barrier to installing such a capacity, not only of handling the solvents but technological know-how to purify these solvents. So the manufacturing is an hurdle, and storage and handling is also an hurdle. So because of that, that is the biggest risk that we take on daily basis, on because these are flammable materials and not a green this thing. So they come under PCB norms, they come under PISO norms, and because of that, I think that's the biggest risk that we take on daily basis.
So anyway, I think it was a very nice session. We could understand your company in a much better way. So Kiran ji, Sarath ji, and Shami ji, please accept my best wishes to you, your entire management team, and sir, best wishes for the public issue also. Thank you very much. Namaskar.
Thank you. Thank you.
Thank
Thank
you
you
so
so
much,
much.
sir. Thank you.